Hi, my name is Daisy Casillas. I'm Washington State's highest producing 1% real estate broker. I'm here today to talk to buyers and how you can reduce your interest rate for the first several years of your mortgage. Disclaimer, I'm not a lender and this is only for illustration purposes, but this is a possible scenario. Interest rates are based on a variety of factors, including your income, your debt, your credit scores. But don't think that you have to have a perfect credit score because you really don't. Naturally, the better your credit score, the better the rate, but that doesn't mean it'll be a terrible rate or that you can't refinance later when perhaps your income has increased and you've improved your score. So don't let the fear of possibly high interest rates stop you from investigating the possibility of home ownership. If there's even a possibility, you should try. Why? Because you already pay a mortgage and the associated maintenance costs. How? Well, no landlord buys a property without first knowing that your rent will cover all of his expenses. And that person gets all of the benefits of home ownership without the payments. Even if he has a loan on the property, you are paying for that. Tenants pay for that. So it's better to pay yourself rent. Mortgage sounds like a big, scary adult word. So think of it as that you are your own landlord and you are your own tenant. You are paying yourself. In this market, which is no longer a seller's market, you do have leverage to ask the seller to buy down your interest rate. So here's an example. I got this from my favorite lender, and it is based on an actual listing of mine. It is based on a sales price of $575,000, only 5% down. And in year one, the interest would be reduced from, instead of 7%, it would be reduced down to 4.875%. In year two, that would be 5.875%. And then in year three and beyond, that interest rate would go up to 6.875%. Now that's with a maximum seller credit of $25,000. Now you're probably thinking, okay, but in year three and beyond, I'm paying 7% or whatever the current interest rate is. Okay, but we don't know what the future holds. So in year three and beyond, interest rates might be 8% or 9%. And if that's the case, you have it locked into what it is today, which is around 7%. But if in the future, the interest rates go down to 4, 5, 3%, I don't know, no problem. You can refinance it at that time to the then current interest rate. But in the meantime, you are paying your own rent to yourself and you own the appreciation on the property. The appreciation does not belong to the bank. It belongs to you, even if you owe on the property. So when you go to sell that property, that money, that extra appreciation goes back to you. So most of the time, it's going to be advantageous for buyers to own their own property. So give me a call. If you have more questions about this, please be sure to like this video and share with a friend, because doing that helps my channel, which supports 1% brokerage. Thanks very much. Bye.